Welcome back to Power Trading Radio Live and your host, Merlin Rothfeld, with today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. It is your Monday edition. We are here in studio with Michael Atias of OTA Tax Pros. Normally, it's such a depressing topic for most Americans. Like, oh, taxes. You know, you make it through the holiday season, you get that little bit of joy, and then all of a sudden, end of year, and you have to make some big decisions with regards to tax. So I thought it might be appropriate to have you on.
Thank you for having me.
The necessary evil.
The necessary evil. I'm your friend, not your enemy, remember?
Absolutely. No, hey, you just ask Donald Trump. Having a good tax guy can save you billions and billions of dollars. Guys, it is a tax. We'll do tax basis for we're going to do one big segment for our closer here, but we'll keep it tax focused. If you have any specific tax questions, let us know. Send them in at powertradingradio.com and click that Power Blast button to send them to us. You know, one of the things that we see happen at the end of the year, which I think might be of interest to traders here from a mechanics perspective and also how to use it for their own benefit, is end of year tax selling, where a lot of major firms, institutions, hedge funds will sell off losing trades to take those losses for the year. How does that work, and how might our viewers utilize that?
Well, for the individual trader, one of the things you want to look at is you want to bring up two reports. The first report is what we call the realized gain and loss report. Mm-hmm. Those are actually the trades that you've already finalized, where you have a profit or loss, whatever that may be. That's on the one side. On the second side, you get the unrealized report, which is basically positions you still have open,
yep,
whether you have a gain or a loss. Now, what you want to do is when you're selling those positions, the unrealized portion of it, is you want to sell the losers. Why do you want to sell the losers? Well, guess what? Hopefully on this side right here, you had winners, and some winners, some losers, but overall you had a gain. Mm-hmm. So you want to take these ones that are still lost and offset against those gains to reduce your tax liability. Now, if you don't do that, then you're going to pay tax on this full amount right here. Mm-hmm. The IRS is not going to say, oh, you lost some money here. No, they're only going to treat the realized positions there. Now, what you want to make sure is that when you do that, if you're an active trader, that you don't trigger the wash sale rule. Right. Because if you trigger the wash sale rule, you've done absolutely nothing, because what will happen is these losses, they'll get recorded, but they will get deferred, so you've missed your purpose. Mm-hmm. Now, if you guys already made what's called a mark-to-market election, then you don't need to worry about any of this, because guess what? Whether you sell it or don't sell it, you get to recognize the loss even on open positions.
Right.
So those who have mark-to-market election, if you don't know what it is, we can expand on it, but
it's great.
It's great.
Mark-to-market's a very powerful
It's a great thing to do. I mean, it simplifies life and reporting everything, a lot of different benefits to it. But if you don't have it, you can't elect it at this point, by the way. You've missed that boat.
Oh.
Yeah. The only time you could have elected was before the deadline of your tax return, which is, if you're an individual, it would be April 15th. If you have a corporation of some sort, that would be March. And so you probably have missed the deadline on that. Not probably, you have missed the deadline. So therefore, you should be looking at selling those losing positions.
Okay, so let's say you had two things there. So first off is the realized gains or losses, and that's an easy one to pull up, guys. Second one is whatever open positions you have, which might be unrealized gains or losses. So in theory, if you have a bunch of gains, it's good to sell off those losing positions so that you can basically lower your tax exposure. Now let's say that there isn't any real gains. Let's say they've got a gain of maybe $100 on the year. I'm just making it up. It's nothing, right?
Right.
And they've got on the books an unrealized loss of $5,000. Is it even worth it to do it at that point? Because it seems to me like you might want to just hold on to that one.
Well, look, remember that there's two questions here. There's the tax question, and then there's the investment or trading question. So first, I'm not going to give you investment advice or trading advice, meaning if you want to hold on to that position, you can, and you don't want to relinquish the fact that you have a losing position there, that's yours. And you might be still in the trade and you don't want to get out. That's fine. But remember that even if you release those $5,000, well, you could claim for sure $3,000 of that. Now, what is the value of $3,000 worth of loss? Well, let's look. Maybe you're at the lowest bracket. That's 15%. Okay. That's worth $450 for you. Hey, $450. That's a gift to your significant other for this upcoming New Year's. It's a weekend in Vegas. It's whatever you guys want is paying down those Christmas gifts.
A weekend in Vegas for $450?
You got to stay at the Motel 8.
Yeah, it's not near the strip.
Yeah, exactly.
Comes free with cockroaches, but totally.
Cheap weekend there. Anyways, so that's an option. Now, what if you were at a higher bracket? What if you're at 30% bracket? Okay. What if you live in California? Hey, guys, there's right there at 9.3%. Plus, let's say the average bracket of this federal is 25. That's 35% almost on $3,000. That's over $1,000. Now you can actually stay at a nice hotel in Vegas.
We like
and
it.
move up from that.
Using
motel
taxes
rate.
to stay at better hotels in
There
Vegas
you go.
on Power Trading
So I
Radio.
mean, there's different ways of how to do that. So yeah, that's the question. Now, also, you may project a gain down the road next year. Let's say you just start out trading, and you have open positions right now that's showing a profit, but you don't want to close them yet because you haven't reached your target. You know you're going to recognize a profit in January 6th for $30,000. Well, why not recognize the ones you have losses now? Yeah, you're not going to claim all of them, but they will get transferred to next year, carry forward. Then they'll offset those winning positions. So it has to be done in some sort of planning. You can't just go like, let me sell this or let me buy this,
Right.
of course. So there's the side, again, of the investment side and the tax side. So they have to come together.
It's definitely a plan. I mean, there needs to be that thought-out approach. And I always make fun of H&R Block, so I apologize, H&R Block. Your stock hasn't done so well anyway, so obviously somebody else is making fun of you. But most of the time when you go to these tax professionals, they're used to, you got a W-2 and a couple write-offs, fine, that's H&R Block. But if you have more complexity, like I've got a lot of different trading accounts, I have real estate investments, I've got interest in oil companies, et cetera. You know, it's important to have somebody who knows this because shuffling these things around can be complicated. B, it can be extremely advantageous to move things in the right places within the tax code. Not saying do anything illegal here, but shuffling things around to benefit you and make more for yourself. Well, you know, a lot of people will go through this. I know this is something you do for your clients where you'll actually do a look back and say, all right, let's go back and look at your previous few years. Who cares who did the taxes? Could be you or maybe another firm. Because a lot of times they're doing it incorrectly. And you've gone back and found a lot of, I'm not going to say hidden money, but money that was literally thrown away.
It's not hidden money like what we say, overlooked money. So here's, you hit the nail on the head. Again, H&R Block, Liberty Tax, doesn't matter, your local CPA, most accountants out there, and I know I've worked in this industry for the last 15 years now, is most accountants are just, it's kind of like a factory. Give me the documents, let's see how many returns I can churn in 3 months, which is basically taxes, right? January to April, give or take. So that's their goal. That's their game, is like how many returns I can
get the return quota.
Exactly. Exactly. I got a quota, I got to make it. That's it. Very simple. Whereas we look at things from a more strategic point of view. It's like, okay, we'll ask you a lot of questions. We'll interview you. Yes, obviously, maybe it's going to cost you a little bit more than what you would go as far as the service fee, but as far as the savings, there's no comparison.
So I'm going to complain that it might cost me $200 more, but you found $5,000.
Exactly.
You can do that all day long on my account.
All day long. And by the way, it's a recent case. We had this guy, an old gentleman. I think he had done his own returns or somebody else did returns for him. And let me tell you something. He missed something that was worth, I'm not making this up, he missed something that was worth $84,000 to him. And you know how it came to be? He was a student, he watched our class, the Core Tax Strategies, and from that, you get a consultation with us, and we met, and I looked at the return, and he said a couple of things, hey, we might want to look into this, and I gave it to one of my staff members to look at, and yeah, she did the research. It was not something simple, but she did the research, and we found a clause in the IRS code that basically gave him an $84,000 refund. It actually was $100,000 the first year. The second year he actually owed, but the net was $84,000. So it's pretty good for.
Yeah.
What did he invest? Maybe a couple of grand with us, a few grand with us. It's totally worth it. Yes.
Yeah. Well, this is something that I think a lot of people don't understand is the complexity of it. I mean, we all hear about it. I mean, even during the presidential campaigns, everyone said, "Get out of the tax code. We need a whole new tax reform." It's funny because I think if there was a total tax reform, a tax code redo, it might actually be bad for you. You do well because the tax code is so messed up and so ambiguous at certain points that you can take advantage of these things if you know what you're looking for.
Well, let me ask you this, Marilyn. You trade options from time to time?
I do trade options.
So do you like volatility and
Love it.
uncertainty? Okay, that's great for an options trade, right? You would love that volatility, right? Well, the same thing in the tax world. When there's changes and then we have a new president, a new Congress, and tax reform, whatever, there's a lot of uncertainty, a lot of different forces pulling different shapes. Look, to be honest with you, it's never going to be something like some of the candidates said, flat tax, 15%, 10%, all this stuff. Look, those are too simplistic approaches because they ignore the fact there's half of the population right now, okay, is not paying taxes. And I know this for a fact. I recently researched this. You guys go to the IRS website, there's statistics, and you'll see how many people are not paying tax. Out of 148 million tax returns, about over 50 million tax returns, not people that are not paying tax. That's amazing, okay?
Wow.
So I think it's too simplistic to say it's going to be some kind of like flat tax rate or whatnot. But you're talking about that. So we have a new president. Now it's official. Trump is our new president. And he declared that he has a plan. Also, Congress declared they have a plan. Between his plan and Paul Ryan's plan, there's got to be some compromises there because they got two major forces now playing there. There's going to be a reform. How big, we don't know. But there is. Right. Now, it's not going to affect most likely your 2017 because even with a majority in Congress, it's not easy to pull those plans in a matter of a few months and, by the way, go retro.
Because everyone's fighting,
Most likely, it will apply to 2018. So we got to think about it. If the tax rate is going to come down, then what do? We have income coming up next year, so do we accept this income or we find strategies to defer the income? What about our expenses? Do we accelerate them now because we're at a higher bracket right now and maybe next year we'll be at a lower bracket? Another thing that Trump has talked about, and I honestly believe this has a good chance of coming through, is he's talking about small business, which is basically the backbone of the economy.
Absolutely.
Everybody knows that. That's the driving force. It's not Apple is great and Cisco and whatever companies out there.
It's the next Apple.
It's the next
Cisco,
right. Those are the companies that you really want government incentive. And right now, they're paying a high tax rate because they're basically all pass-through entities, and they're paying a very high tax rate, and they don't have the same benefits that, say, Apple and Walmart, those companies do. Right. So one of the things he was talking about is undistributed profits, is the ability to leave profits in your company, right, and to grow the business. And it makes sense. But in the past, it didn't make sense because you left the money in there, you still pay 50%. Right? So you say, well, if I'm paying 50%, I might as well take the money. Now, if you keep the money, the suggestion he had is a flat rate of 15% on all undistributed profits. Now, if that comes through,
it almost encourages you to keep the money in there.
15, 18, whatever. Now, when that thing happens, you all of a sudden, maybe I shouldn't pull out that salary or dividend. You start thinking different ways than we currently think, and that's where we come to play. Companies like ours, it's not we just don't do your taxes. Yeah, we do that. Yeah, we fill out the forms and everything else. But really, where our value is looking at your information, projecting the present and the near future and the long-term future as far as what you want to do with your wealth bucket, what do you want to do with your retirement, et cetera, and devise a plan that will really work for you.
There's a phrase that gets thrown around here at Online Trading Academy a lot, and of course, even more in the financial world, is that trading is simply the transfer of wealth from those that don't know what they're doing to those that do know what they're doing. And I look at your industry as maybe even more profound of an example as that. I mean, you hear President-elect Trump openly talking about it, not paying taxes. And here's a guy who's got businesses up the wazoo. It's not a question of is there money there. It's a question of do I have a team of people helping me pay as little as possible and do so legally. I always emphasize this because I think people think that there's like some deception to it. Like we're saying, you're just going to hide that money from the IRS and be part of this 55 or 45% of Americans that pay no federal income tax.
It's close to 50 actually. You see what I'm looking at there, but it's close to 50%.
TJ will bring it up for us. TJ, this is an article from, I think this is from Market Watch. This is in April, but just backing up some of the facts or stats that Michael was throwing around. 45% of Americans pay no federal income taxes.
It's about 78 million. That's exactly what it is. I looked at the official IRS statistics. So this is not far from the IRS statistics. So you probably rounded numbers.
Now,
there.
Is this people who are let's I'm going to use myself as an example, and then these aren't exactly true numbers, but just so we know we're directing it at a real person. So let's say it's my taxes, and I made a bunch of money, but I'm using all these write-offs and deductions. I get to the point where I'm paying no federal income tax. That's different than people who are just blatantly not even filing their taxes.
Well, yeah, there's a lot of different groups that, by the way, recently IRS reminded us that they forgot to process 6 million returns. I'm sorry, 5.9 million returns. They forgot.
Oops.
And by the way, the projected revenue from that was a few tens of billions. I don't know about you, but that could build several schools, maybe dozens, hundreds of schools. I don't know what it costs to build a school or a stadium or whatever.
But we got cutbacks. We can't hire the people to process all these returns.
So there's a lot of different things. And one of the questions I'm asking, I think a lot of people are asking is, not if Trump paid tax and how much tax he pays, who was his accountant?
Right.
Wouldn't you like to know that?
I think it's the same one. I think it's the same one for General Electric as well.
That's the mystery question because once that's being published, I think that guy or that firm is going to have a lot of business.
There's your marketing campaign is just we did Donald Trump's taxes. Done. Your phone's off the hook.
Exactly. So yeah.
All right, so you mentioned a little bit about this tax course. Talk a little bit for our listeners about that, because the end of the year's coming. Maybe that's a gift. Honestly, it might be one of the best gifts you can ever give is a tax planning class.
Yeah, this class is it's really geared towards traders, but you really learn a lot about about taxes from this class. Now let's spill the beans. You know, it's not a really big secret. We all know this. Who pays the least amount of taxes as percentage of income is business owners.
Huh?
Now, why is that? Because look, if you're an average Joe or an average gal, you work in a firm, you might even make a good living for yourself. But guess what? You're not putting your hands on the money first.
Right.
First is Uncle Sam, and then the state, and then Social Security, and then everybody else. And when you get your money, you still have to pay sales tax and DMV and property tax, et cetera, et cetera. So you're left with whatever they leave you. Or you as a business owner, you say, like, hold on, let's change the game here first. I'm going to write off first everything I can legally from the business. My car, why not? My meals, why not? What about clothing? Even clothing, you know, Marilyn, if you stitch a logo of your company right here, then this shirt right now becomes a write-off, okay? So
I'm not that cheesy, but I can get them here where my cufflinks go.
Exactly. Cufflinks, I mean, there's a lot of different things.
Is that why you have little, I saw you little...
That is it. By the way, yes, you see this guy, it's very difficult
zoom,
to see.
You can't even see it.
You can't see it, but it says MM, which stands for initials, my name, Michael, and then the second name is for the company I have. So that's, by the way, it's small by the way. You guys even don't notice it. It's a complete write-off.
It's stylish.
It's stylish, exactly. So now, you can do things like that, you know, vacations. You ever think, oh, I'd like to go somewhere. Why not make it a business trip? How do I do that? One simple strategy. Let's say you're in the business of, you're some business owner, okay? Now, you don't know anything about time management or about effective styles of communication. Now, these are all soft skills that you need to run a business. Now, you can do it at the leisure of your own and purchase a course online, or you can say, let's go to New York for the weekend. There's a conference there, and that trip cost me $3,000. By the way, if you don't attend the conference, no one would know. So you're still there as long as you got that ticket. You got that ticket. Sometimes they scan it.
Swing by, grab a brochure from the lobby of the hotel.
Something in that regard. And once you're there, that's it. You write off. And there's a lot of different strategies like that. Therefore, you first write off all the expenses. Now, what is left? You still don't have to pay tax on it. You can decide, hey, I'll defer this income. I'll take a bonus next year. I'll put money in a retirement account. I'm going to rent the house I live in to the company I own. And there's on and on different strategies. Of course, you will reach a point where you got to pay tax. I mean, you don't want to not pay tax altogether. Pay something. Suffice the hunger of Uncle Sam. But you saved a lot of money. And the key is, look, if you don't know what, defer it first.
Yeah.
Pay it later. Right. Whatever it is. Kick the can down the road. Maybe in 20 years there will be no tax. Okay? So who knows?
You never know.
You never know, right? So first I know is let's not pay the bill right now and push it as further as I can. So that's the idea. And in this class we teach you guys, whether it's trading or other ideas you've got of how to build a business and how to write off those expenses to truly build your wealth much faster than you would as an employee. Now, don't get me wrong, I'm an employee, but I'm also a business owner, so I do the both thing, and I think you do the same, right?
Yep, absolutely.
So that's the way to go.
All right, so I'm at OTA Tax Pros. You used to have a button right on the front that said free class or attended class. What happened to that?
There is a free consultation right there. If you see, right, so you click on that, and if you click on that, then you will see that it opens up this little information, and you can type in, and based on what you're interested in, we know who to assign you to. We have different experts in our team.
Awesome, guys. That was Michael Atias of OTA Tax Pros. End of year is coming. I know many of you are excited for the end of the year. Of course, some of you might be, a little bit disappointed if you had some nice gains. And given the way that this year has gone, you probably do have some sizable gains out there, which means your tax exposure could be more than it is normally. We'd encourage you to contact OTA Tax Pros to get more information. If you go to otataxpros.com, you click that free consultation button, which was hugging the right-hand side of his screen over there. You click on that one, you can type in your question, you can find more information about the physical location or online classes as well. But the first step is getting in touch with them and figuring out how they can help you custom tailor your tax strategy and your tax plan. That's right, it's a strategy and it's a plan going forward, and how we can optimize the returns for your personal or business expenses. So, Michael Atias, thanks so much for coming on today. Appreciate it.
Thank you.
Guys, we're going to take...
Happy New Year, everyone.
And plan. We're going to take a quick break. When we come back, I have economic announcements. I have some earnings announcements as well, so stay tuned. We'll be right back on PowerTradingRadio.com.